Well, good evening. Ira Epstein with your financial market wrap-up, and this wrap-up is for Monday, and we're at the 3rd of March, 2025. And what a crazy time this is in the marketplace. And the reason I say that is President Trump today did hold his news conference. He did come out and say that full 25% tariffs are going on on Canada, Mexico, 10% more tariff on China, which doubles their tariff from 10% to 20%. China has already said that they will target U.S. foods in retaliation. Trump made that very clear in the statement when he said farmers have to start looking inward now in order to sell their crops. And with that, prices went coming down pretty hard. So you've got to look at the change that is going on. The next thing, you continue to get bids in the bonds and notes because of the uncertainty. The economy is likely to slow down. You're suddenly getting the break in the 10-year notes. What Trump hasn't mentioned is how much of a break he has caused in the stock market, which in many cases is now underneath when he took office. So this isn't a very good thing for him. In the metal markets, it's a $50 swing almost every day in gold. So they're going all over the board. The dollar got hammered today, and tonight you're fairly stable in most of the currencies. The big question for the dollar, is this the buying opportunity or are rallies the sale now? And the reason is you're going to get weakening. Europe is strengthening. You're seeing that already. You're seeing certain markets like in China, their stock market is moving up rather dramatically. We're seeing defense money going to be spent throughout Europe and everything else that they have to do. The negative for Europe, and it's a big negative, they're going to have to go into debt a lot more. The positive for Europe is the European Central Bank has to continue on the pace of just lowering interest rates to cushion the blow. That's what they are there for in times like this. They are not there to just fight inflation. They are there to cushion the market when events happen. This is a world and a big time event where suddenly the American blanket over Europe for defense has fallen away. It's questionable at the very least, and that becomes an issue. On the energy market, what you can count on right here is some pressure on the marketplace, all right? Just the idea that we take in a huge amount of Canadian oil to blend with ours. That is going to go up by 10% literally tonight at 12:01 p.m., which is actually 12:01 a.m., I should say, at Eastern time, Tuesday morning. So that is going to... Is it going to dampen demand? Probably not. Will it raise prices? Probably. That is why you're seeing gasoline a bit higher as the crude is lower, because we'll be refining. That doesn't mean we don't take in gasoline. We do from Canada, and on the East Coast especially, and you can count that is going up too. We've watched in the natural gas market, the market slip back. I expected it, as you know, to hit the 18-day average. I thought it had peaked. It did so, and you got a nice bounce out of it, but that's all that I see is a bounce so far. We know that the Trump administration decided to do a probe into should there be a reserve by the U.S. owning it, Bitcoin and other token coins. Well, I don't know. Here's what I do know. The market last night went up $10,000 a coin and gave almost the whole thing up. You'll see that on the chart as we take a look at it. All right. So in the stock market, we're under the 18-week average of closes. We haven't been like that in a very long time. If you stay like that, do you think that's a change? I do. Is that a possible top? It is. So if you stay like this, that is a problem for the market. In this whole bull run that we've had for a long period, other than right here, and that was a heck of a break. It didn't take place in a day or two, by the way. This break began right back here in September and really didn't end until the end of November. We can do that again. And do I think this is the top in the stock market? Of course I don't. I think we'll look back in a while, and the market will be at higher prices. It's inevitable that that's what the stock market does over time. That's the key to the market. Indexes rotate bad stocks in, good stocks out. You know that that's the game. But for the moment, you have a top. The market ended up with this line. Now, we had another line before I left, which was a rising wedge. And normally, that forces the market to break out to the upside. It didn't. And when the market got back right through all this, that is when you broke the wedge. I wasn't here when that happened. And as the market leaked down, the stop orders were run. That's one way to look at it. You have a pattern that has lower highs, lower lows. That's bearish. Today you had a huge outside day to the downside. Just to give you an idea of the range of it, you're looking at 60 down to 58.21. Now, to me, nearly 180 points is a huge day to the downside in the market. If we take out today's highs, tomorrow or the day after, you got to put on your cap and go, what the heck is going on? What changed? Because that is what should not take place, in my opinion. Where's the resistance? The resistance is from 60.17 to 60.83. The problem with the resistance as it sits on this chart is if we come back and we look, let's see if I can get this to do what I wanted it to. Let's come over here another day. There we go. 6,050 is the high of today. In order to get to these sell numbers, you got to take that out. I don't like that pattern. Suddenly you've broken the pattern of lower highs, lower lows, and I question what that means. Notice another thing. Where did the market go to today? It went down and hit 58.35. What is the Bollinger Band? We can come back to it. 58.33. You hit 58.21. What do I teach you? First time you hit a 200-day average and you haven't been there in a long time, it's often an important support point. If it were up, it'd be an important resistance point. I think professional traders put things like that into their systems and they pay attention. I certainly would have. Where's the Bollinger Band? You've been running it. So in the Bollinger Band, this is called the Gorilla Glue trade. It's every day you're hitting the Bollinger Band. It takes, on the fourth day, I call it the Gorilla Glue trade of doing it. And you've had these just locked in. Now, the support's 58.35 to 58.44. Support doesn't mean you're a buy there, but it's certainly plenty of reason to be covering shorts, in my opinion, because you're still oversold. So there's nothing I see on this chart that if it gets under that tells me that if you were short and you were sitting next to me and asking me, hey, Ira, what do you think? I'd be saying, well, as far as I teach, that would be a short covering area. I'm not interested where the bottom is. I'm interested in the probability of those two numbers together. When we look at the NASDAQ, you can see you can get through these numbers. It's the Gorilla Glue trade. Here, you're not embedded. You're oversold. I'll let somebody else want to sell it down there. Which market's getting hit one of the worst times? The Russell and the NASDAQ. Which stock's getting hit a lot? Right now, it's NVIDIA, which was the market that was armored. Nothing you could do. But because of all these tariffs now, you've taken that chink out. Has the business for NVIDIA changed? Well, the Chinese business has, but other businesses really haven't. Will they be able to replace that business? That's going to be a question. When we come to the micro Dow, you don't see the 100-day average acting as the resistance. When you came down, you kept fighting. Could you get back over it? So far, you haven't been, but you're oversold in the market. The Russell, I think I've been adamant. I think this is the worst positioned of the stock indices, and it continues to come down. But as interest rates keep falling, eventually, it'll help this market. So it's something I want to keep my eye on here. There's nothing on that chart that says I should be looking to be a buyer in any manner. And by the way, on this chart, let's see if I can get this to come back for us. Let me come right here. Are we embedding? So this is the embedding process. You cannot count tonight because we don't know where we're going to close on Tuesday. But both numbers on Monday were underneath 20. They were that way on Friday, and that way on Thursday. So yes, the market is embedded. I would be teaching hard rallies in this market as long as that number stays embedded, potential short sale. When we take a look at the 10-year note, upper Bollinger Band, this is that gorilla glue trade. It forced the market to embed. Pullbacks in the market are still, in my opinion, buying opportunities overall. Same thing in the 2-year notes. And again, that gorilla glue trade, when it latches on and it forces this to embed, a whole different world starts developing. Then we get to the dollar, and I admit to this, confusion. The pattern is that you're trying to stay under the 18-day average, which has a bearish bias. You don't have the trend down. What you have is a lower low, higher high. A downtrend would have lower highs and lower lows. You're not there. So I look at the market and I scratch my head. I understand one part says, well, America can withstand these tariffs better than others. And I see another part that says, can it? Other currencies have been cutting rates. If you saw today's PMI and the ISM data that came out, it was ugly, real ugly. So we're starting to see the slowdown. Now, production went up today, barely, but another 50 reading. But we're seeing the employment numbers starting to slow. So I think the Fed's looking at it, and you start watching the CME Fed Watch page. You're seeing traders that weren't pricing in any rate cut this year starting to look. Could we get one in the summertime now? So that is coming back in the vogue on it. If we do, is that bullish or bearish for the dollar? It will depend where we're at. Guess what I'm going to go with? Not fundamentals. I'm going to go to the charts. The charts right now are saying, no, there's nothing to do. And the euro's confirming that. You have a downtrend in the swing line, but you have upside bias. That's not trending and telling me anything. Remember, when you're over an 18-day average, even if you get sell signals on the swing line, the two count out each other. You have nothing. In the British pound, coming on back up. Take a look where we're at. The market likes what it's seeing. I really think it's going to be having big problems up here at the 200-day average of closes in the upper Bollinger Band. I'm not a top picker. That is where, if one were riding this up wave, those numbers would be of great concern to me. Then we get to Bitcoin. So yesterday, people rush in because Trump is going to take Bitcoin and convert this all into the $500,000 market. He is talking, should they buy 20% of the remaining Bitcoins or the total amount that can be produced? I don't know. They're doing a study. So the market gets up overnight to $95,750 and then comes down and finishes at $86,315. Now, if you have the stomach for a $9,000 swing, that's great. I don't. You might. I don't. There's zero chance of that. In the Brent, lower highs, lower lows. And by the way, the Merc now has, you can trade one Bitcoin. I'm waiting to see how the volume does in that, and the small amount of contracts at a time, the 110 side. So there are products out there for you. They've come up with corn the same way and the wheat. And I just read a report that since the launch, they've traded 350,000 contracts of these. So there is a market for all this, and those are cash delivery on those mini contracts and the grains that they're coming out with. They are not delivery of the product. That I love cash delivery better. When we have the Brent, now, if you see anything bullish in that, you can write me and tell me what you're seeing so I get in a feel, other than you just think that's a low. Before I left, the market was breaking under the 18-day average over here, and it has stayed down. It is still bearish, in my opinion. Same thing in the WTI, still bearish, and if they embed the readings, could go even lower in the market. Remember, tariff wars are going to hurt everybody's product demand, everybody that gets a tariff on them from the U.S. You want to do business with us, and we tariff you, it's going to be a problem. Heating oil. Right on back down. The gasoline market has got the strength. And you can, by the way, this is natural gas. But nat gas came down where I talked. Before I left, I said you had lost the embedded reading. I thought the price could eventually reach the 18-day average before getting over this high, and the market, well, it made me feel good about all that. That's the way that I'll leave it. So I'm going to be writing tonight. I wrote another detailed letter on my thoughts on the market. I'm looking at a few trades here that I think I'm going to have you put out tonight. As I did this, I saw a couple of things that I liked, and I'll look at all the trade setups for the evening. But to get my report, to get the Linn idea, and this is what we give our charting people with us, our people that trade through us, people that buy my research, different ways you can get all of our different research, talk to our staff. But in the meantime, you can hide behind the email and everything else. Go to the website, iraepstein.com, free offers. And take a look at it there. You can call my staff if you have questions. There'll be an icon I'll put up here. You can click that if you're on a PC. It'll take you right to that page as well. I'm Ira. I'll catch up with you first thing in the morning. Should be an interesting one. Take care.